What is up, everyone? Welcome back. I hope you're having a great day. Uh, this video is going to be sort of a follow up to one we did a couple days ago. We introduced a brand new, easy to use bookkeeping template that works on Google Sheets, which actually we're going to be doing an Excel one exactly like it soon. But one of the things that has happened in the meantime that was kind of neat was we had our first purchase of it. And to that first purchaser, thank you again for that. But one of the things that I always try and do with someone who buys something for the very first time is I try to reach out to them directly and leave them a message saying, "Hey, thank you for the purchase. You're the first person to buy it. If you see any issues, have any questions, follow up feedback, feel free to give me some." And this person was actually nice enough to actually give me some feedback and had a couple questions, and actually said that it'd be really cool if we did a video to kind of follow up and show those specific questions that they had. And they had really two particular questions that we're going to cover today. The first one is how do you add and delete accounts in this template, which is a great question. The second is we're going to walk through just a question of what's the difference between cost of sales and expenses, because it kind of sounds like a very similar thing, which is a great question. So today we're going to cover both of them. We're going to cover the first one about how do you add or delete rows. And we're actually going to cover it not only on this template, but one of our other ones. And then we're also going to answer the question about, or at least discuss, what's the difference between cost of sales and expenses, again, which is a really good question that I hadn't really thought about before. So we'll go ahead and we'll go into our template. And again, this is the template we looked at it a couple times. I'll leave the link to the product and a link to the previous video. If you haven't watched the first video, you probably want to watch that first, or else this won't actually make sense. Let me delete that because I was practicing this before we go ahead. So let's say you wanted to add a revenue account. What you'd want to do is you want to go over here to product 4, or you go to the next one down below the last revenue account, or cost of sales or expense account, whichever one you're wanting to add, and you just add it. So let's say product 5. Now, if we go over to, and let me show the tabs a little bit. There we go. If we go now to our income statement and we scroll up, you'll see it's actually already added there automatically. The only thing that you really need to do is you need to go to this row right above the total, right here. And you need to go right click, and you got to insert one row above. Then what you need to do is take the formulas, because there's formulas actually in this account. Let me show you. You can see formulas here. You need those formulas for this to work right. And so if you go right here and you highlight this set right here and pull it down, you will see actually the formulas get pulled down. So this is really how you add an account to the income statement. Now, you also need to go to your monthly income statement, and you can see you got the same thing here. What you need to do is, again, go to the row right above the total and insert one row above, and then you got to highlight across the board with a left click, highlight all of this. Let me remove my screen so you can see the end of this part of the screen. And you just got to left click on this little blue box and drag it down. And now you have all those. Let me pull this back over to the front and show you here. Now, what's neat is that's really it. That's all you have to do to do an account. Those changes were added to the revenue and to the expenses. So, for example, if you click here, if you click revenue and you click here, you now have product number 5, which we didn't have before. Same over here on the dashboard. If you go to the sales breakdown, you now have product number 5, product number 5. So the list itself gets added all the way across the board, everywhere where you have accounts. By just really adding those rows, by adding those rows, you now have an additional account. And the same thing with cost of sales and expenses. The only difference is if you add an account in cost of sales, let's call it other one. The only difference here is you do have to go. You're inserting the row at the bottom of the cost of sales, and the same for the monthly income statement. You're just going here, and you're dragging and pulling these ones. That's really the only difference is that you're always inserting the row kind of in the right above the total of that particular section. So if you're adding a revenue, you're inserting a row above the revenue. If you're adding one in cost of sales, you're adding it right above cost of sales. If you're adding it in the expenses, you're adding it right above the total for expenses. But that's really it. Now, if you want to delete one, you're doing effectively the same process, but in reverse. So let's take out this let's just delete that one. You delete it, and you go over here, and you just go to that row, and you hit delete row. Right click and delete row. Now, we didn't actually put that one in the monthly income statement, so we don't have to worry about it. But let's go ahead and take out our products 5. Just delete it, hit backspace or delete in that cell. You go over to the income statement. You go right click here, right above where it was, and you say delete row. Then you go also here, you right click, delete row. Now, one more thing. If you are an owner of an Excel template and you're trying to do this, you might be right clicking and saying, well, I don't have insert a row above. If you're in Excel, you're going to right click and it's going to just say insert row or delete row. That's the same thing. It'll have the same effect. Now, for some people, and this is one of our better sellers, and there is also a template on how to use this one. This is the same process. The only difference is you don't have that report for the account setup. So you actually make the change right here. So if you're in this one, which is, again, I'll show the screen so you can see which one. This is the simple profit and loss statement, or also I think there's one called automated income statement. And I also have a rental income statement that we sell. They're all going to be treated the same way. What you do is you go in here, you say insert one row above, and now what you actually type is here, you actually type in your account. So let's just call this other income, and then you just go over here, drag it and pull it down, and now you got this functions. Go over here, do the same thing. You notice that it actually added itself here. You right click, say insert one row above, grab all of these formulas. Sorry, I pulled that thing over. And you just left click and you drag it down. And then if you need to delete a row, it's the complete reverse. You go to this income statement tab, hit delete, right click, delete the row, right click, delete row. And again, as I was saying, these changes to the register automate as you go. So these drop downs that you have, they automatically start the update. So that's kind of that's how you add or delete rows in either one of those two templates. Or also, like I said, if you have the income statement, or not income statement, the rental income statement, or the automated income statement, they all function the same way. It's the same concept. I try and make them all pretty consistent with the same concepts. One, because it's easier to write them if I'm using the same formulas over and over again, and two, because it's kind of the best way to do it that I've found. And so that's it. That's how we do that particular part of adding and deleting accounts. If you have a question, you can always reach out to me privately, leave a comment if you want to. I'll try to answer it, or maybe even do a follow-up video if we have to. Now, the other question is a great question, and this is going to be more of a kind of a bookkeeping accounting question. Now, before I start with this, a little bit of disclosure. And this is purely kind of just my thoughts on it. These are general. I have not referenced these to the generally accepted accounting procedures, but I do think they're pretty doggone close. But if you need to be more specific to your circumstances and you're not really sure what to do, I'd highly suggest talking to a CPA or an accountant who kind of knows what they're talking about in this particular area with your specific business, because each business is different. And also, just FYI, this is not tax advice or tax opinions. In fact, for me, this has nothing to do with tax, but this is just more of a question of cost of sales versus expenses. But again, if you have a specific question for your business, these are just general ideas. You really need to talk to a CPA that knows your business, or at least talk to a CPA, give them the concept of your business, and they can help answer the question. So first off, let's go back to the template, and I'll just show you what. If you've not seen it before, the template has cost of sales, and expenses. Now, both of them are reductions of revenue. But as you can see, they are different. Total. You first have your revenue, you have your income, then you have cost of sales. You see that then you have what's called a gross margin, and then you have expenses. The kind of most concise answer that I can give for cost of sales, that again, this is a non-GAAP. I've not researched GAAP on this. I did not bring up my old GAAP book to look at this, but generally speaking, in very general terms, cost of sales are things that can be kind of directly attributable to the production of a product, or a direct result of a sale, or a direct result of making the sale. Another kind of way is a lot of times they're considered variable costs, or at least more variable than a fixed cost. And so, like a couple examples, and I'll give examples from Etsy would be a good one, and this probably applies to eBay or Amazon, although I don't sell on either of them, but I would imagine the model is roughly the same. If you are a seller on Etsy, and let's just say you're making woodworking stuff, making furniture, or you're making a craft. A cost of sale would be the material you buy to actually make the product. If you're a woodworker, it might be the glue or the nails or the finish or the paint that goes directly into supplying and building the product. Also, if you're an Etsy seller, if you're a digital seller like myself, the listing fees that you have to pay when you list something, and every time you sell something that relists it, or the commission that Etsy takes, or the credit card fee that Etsy pulls, those are all cost of sales because they're directly attributable to a sale. Without that item, you could not have actually made the sale because you either couldn't have built it, or because Etsy won't let you sell without taking their commission, without the credit card fee, and so on. An expense is kind of more of a fixed cost, or generally fixed cost, to just run your company or run your business. So for example, something like if you the utilities, if you have a shop or you have a home office or something, the utilities and the costs of the sale would be examples of a sorry about that. Those would be kind of fixed costs, operating costs to run your business. Now, what is an operating cost in one business may not be maybe a cost of sale in another. That's actually very true. It all depends on what you yourself are selling and what goes into making your product versus sort of the just general overall costs of running your business. Insurance is one of those ones that actually sometimes crosses over. Sometimes, if a big facility has a plant, you might have actually insurance to run the plant versus insurance to run the office. Well, one side might be a cost of sale, one side might be considered operating costs. It's highly dependent upon what your business is about, but that's the general concept. So the one person actually asked the question of, is commissions considered a cost of sale? And I'd say if it's one of those things where when you sell something, you get a you're paying a commission to someone for 2%, or like Etsy takes a commission out of the sale, I would consider that a cost of sale in that point. Doesn't necessarily mean it's always going to be a cost of sale, but it just depends on kind of that nature. So like I said, I know I'm talking in very general terms. I'm kind of doing that because without looking at a person's specific business and what they're doing and looking at their costs, it's a little hard to say exactly what is a sale or what is a cost of sale versus an expense. But I think that, like I said, I think the general concepts here kind of fit. If you have any questions or comments on that, please leave them. Be happy to try and answer or respond to them. Like I said, again, these are not generally accepted. I've not sitting here pulled the book out to say here's the exact definition, but this is just kind of an overall kind of understanding with that. And like I said, if you need to be more specific in what you're doing, I highly suggest talking to an accountant. And showing them your specific books and what's going on and showing them that. So I do hope that helps. Thank you for kind of bearing through that little bit of explanation. I know if that was painful, I'm sorry. It felt painful for me too, because like I said, I don't want to talk too much specifics in that. So have a great afternoon. Like I said, we'll be doing more videos here, more tutorials on some of our products. But I thought this was kind of a good follow-up, especially for the adding, deleting account. So Have a great time, guys, and we'll see you again soon. Thanks.